Hello, technical analysis fans, and welcome to another update from Victor's Kitchen. Today, I want to talk to you about Bitcoin and the bull run of 2024, possible price targets to the upside, possible price targets to the downside, and we're also going to cover the Bitcoin ETF and the halving and whether that can have an impact on price or not. Stay tuned. Let's get cooking.
Before you continue, please pause the video and read this trade disclaimer. None of the information contained here is financial advice. This is only for educational purposes.
All right, let's start with Bitcoin here. Here we are at a price of almost 48,000 USD. Insane. What a bull run for 2024, huh? Well, actually, the bull run started arguably in October 23 already, with this big fat green candle that really broke out of this month-long range with conviction, and it just never looked back. Now, last month was very interesting, January 2024, because it pushed into a huge box of resistance from about 45K to the 50K weekly level that is still waiting for a visit. So prices have been as high as they have been since, so let's say March, April 2022. So it's the first time since then that Bitcoin has seen these prices again, and February seems to want to push even higher. Now, the thing to pay attention to is that this is a huge area of resistance with multiple factors. And it is very well possible that it ends up rejecting from here anyway and pulling back significantly. It depends on how you're viewing the chart. It depends on what methods you use, of course. But what we have for sure, objectively, is what we can see right now on the chart. That is undisputable. And what we see is that price is almost at the highest of January and very, very close to that 50K area. 50K area is a very strong psychological barrier for many. And what could happen up here is that price just blasts through, reclaims it. Yeah, let's bust out the drawing tool, bust through, revisits the level, flips it to support, and then continues higher. Yeah. Now, if that's the case, that means we can aim for stuff like the 61K monthly level easily. There's also interesting stuff around 58K to pay attention to. So definitely much higher price targets. Whether it then goes to all new all-time highs, that's something I would rather decide if price gets up there first and see what's going on. That changes everything. If price goes up from here like this, then we will have to adapt to that new data and see what happens if it does make it up to that level, for example. So that's as far as I would take it for now. But very, very key is this 50K area. Yeah, if it does get visited, does it get flipped to support or not? That's the gateway for higher prices. Very, very important. Keep that in mind. Next question is, of course, what happens if that 50K level is not claimed or the area is not claimed? What if price rejects from there? Yeah? Or if it rejects from where it is right now? Well, let's just pretend or imagine price does manage to push up a little bit, hits the 50K, but then starts failing and starts turning around. How low can this go? Of course, this is the monthly chart. Yeah, every one of these candles is a month. So it's very high time frame analysis. So what I would do is I would go down to the lower time frames, check out weekly levels, check out daily levels, and see what is going on locally. But theoretically, if this really picks up speed from up here and really starts correcting heavily, and I mean, you can see yourself, green. When you go up like this, when price goes up like this so impulsively, it doesn't leave much support behind, at least on this time frame. And what was the last area of heavy resistance? Well, it was right down here, around the 30K area. So in other words, this could start making its way all the way back down to 30K. That is a possibility that we need to keep in mind. So basically, the end of the rest of February will be very key in showing us whether that scenario to the downside is more probable or the one to the upside that we spoke about before. So these would be the high time frame targets to keep in mind. So that was a very high time frame overview of scenarios to the upside and to the downside. Of course, we look at this in the Safehouse Vanguard in a lot more detail. We get down not just to the weekly and daily time frames, but we go into much lower time frames and even use different type of software to see what's going on a day-to-day basis, because it is possible to treat this as very long swing, or for some people even investment possibilities. It's also possible to use these high time frame areas as possible hedging opportunities to protect your capital, depending on what you're up to. This is not financial advice, by the way. Do whatever you want. And it is also possible to do day trading, or take trades that are very short in duration. For example, a few minutes or a few hours. And at the end of the day, you're done. So depending on what you're looking for, you look at different time frames to get a better picture of what's going on. Now, the advantage of the lower time frames is that they don't really care that much about the high time frame analysis, because they're just point A to point B. That's it. You're done. In, out, money in the bank, like the guys already know in the Safehouse Vanguard. So if you're interested in that, that's a completely different story. Then go ahead and join us, and you'll see our day-to-day updates, live trading sessions where we cover different aspects, also on the low time frames. Another thing, this is all technical analysis. This is all technical analysis based, which means you use the price that you can see on the charts and that is irrefutable. There's no argument about that the price right now is 47,915. That's just the way it is. And from that, you start building up your arguments. Now, if you're more into fundamental analysis, then you're probably thinking about, okay, what about the halving, the Bitcoin halving, and what about the ETF? Huge news, finally. My goodness, this has been years in the making now. Oh, the ETF is approved. No, it's not. Oh, it's rejected. No, it's approved. And finally, it seems to be finally happening. I still can't believe it. So the big question is like, okay, ETF is coming out, so now big money is going to come into the market, and its prices are going to explode higher. That is possible, of course, if fresh money comes in and keeps piling in. Well, it's going to overwhelm the selling side. That's just the way it is. And if we look at the stats here on the right, the performance so far, 1 year. In the past year, 119% up, year to date, 13% up. The last week, 12% up. Great performance on this asset. Now, if you ask me, it looks fantastic, but have you looked at stocks recently? I don't know. This is nice performance, but there are things out there that are performing even way better. So keep everything in. I like to keep things into perspective and not get too hyped up about any specific asset. To keep my options open, to be honest. But yeah, it's looking good. But once again, we are at a very, very heavy area of resistance. And I continue to treat it as such until I see definitive signs of that changing. That means I want to see high time frame candles changing. In other words, closing higher and higher and higher, and definitely flipping those resistances to support. So for me, a Bitcoin halving or the ETF news are just news. In other words, nothing that will really change the way I want to look at the chart. So does it matter? Does it not matter? It really depends on how you like to view things. If you're using fundamental analysis and other types of analysis, then of course it's very important for you to pay attention to these things. The only thing that we do notice, or that is tangible, is the fact that more liquidity has entered the market as compared, for example, to the low 15K, 16K, 17K area. There was very little going on down here. There was, it's just very slow. And here you definitely see more money coming in and coming out and moving. It's still not, it's way off what it used to be back in the day in 2021. That was pretty insane what was moving around there. So it's definitely less. But you have to consider the fact that, if a lot of market participants are coming in for the first time and buying at these very high prices compared to, where we were in October, well, there's a possibility that someone's on the other side unloading and taking profits, which, it's not the craziest thing in the world to do, because if you don't realize gains, well, they don't really exist, do they? So it's a little bit dependent on what your focus is, what you're after. If you're a fundamental trader, then yes, definitely pay attention to that. For me, I like to trade based off technical analysis. So these events, if they add liquidity and volatility to the market, great, fantastic. But they're not really decisive for me. I'm not going to base any decisions off of that information. So that's the way I'm looking at things. Like I said before, this is not financial advice. All of this stuff is for educational purposes. So in the end, you have to decide for yourself how you want to approach this and which type of information you would like to use to make your own decisions and conclusions. The only thing we can offer you is to join us at Safehouse Vanguard and to check out what kind of technical analysis tools we use on high time frame basis, on mid time frame basis, on low time frame basis, to just keep grinding the machine day in and day out and getting the objectives that we need to meet on a consistent basis. Now, that's what it's all about, in my opinion. I hope you enjoyed this special update, and I hope to see you very soon on our Discord server for a continuation of this topic. Very, very interesting times. Stay put for more updates on this channel. Hit the like button, subscribe, and I'll see you on the next one. Bye-bye.
Elevate your mastery in trading. Join the Safehouse Vanguard today.